Okay, it's Monday, 3 o'clock. Market's closed. Just a quick update on following up on the weekend videos. The S&P had a very similar day to the last 5 days. It's closed down. Today was a little ominous. It closed right near the low of the day. The range was a little higher, wider than the previous days, and it closed right near the low. So it doesn't bode well for tomorrow. So expecting maybe a gap. Actually, it would be good. We got a gap down tomorrow, and then a recovery could set us up for an entry, or the standard entry would be above today's high, stop below the low. Yeah, that's about less than 1%, which is probably a reasonable risk reward. The trader in me says I want to look at the distance from. Well, let's do the math here. From the top to the bottom here is 0.82%. And the trader in me would be looking to exit up around the high, which is 2%. So that's what, 2.5 to 1. It's kind of marginal. But the investor in me says if I can get in here and if this stop holds, I'm going to do really well because this is, we're buying this on the longer term accounts with the expectation. Let's go over here to the weekly, that this is going to run up here to the 450, 460 area, which is like maybe 5, 8, 9% away, which is a decent return for like a less than 1% risk. But again, I get more aggressive than that. I would be looking at the triple leveraged S&P. So entry would be above here, 44.78. Stop 43.70. So really $1. So that's the risk here. Yeah, 2.5%. So I wouldn't do that necessarily with a huge position, but 2.5% for a 20% or so return is has got my attention. But just following, so nothing really happened much here today. So just go through the indexes, see what happened. The Dow is pretty much playing out the way I drew it a couple of weeks ago. So this is actually looking stronger. So that's good. Small caps still struggling. Had a decent day. It opened down here, ripped up, and then came and closed right down near the lows again. So got a lot of people sucked in, and then now they're underwater. So the small caps are still struggling. Mid caps were better though, and this gives me some hope. There's a lot of congestion up in here, but the mid caps actually closed in the higher end of their range for today. So clearly money was moving into here, because where it was not moving was in the QQQ. It had a decent down day today, which is kind of interesting because it closed right at the low, right at the 21-day moving average. So you're expecting some support here. This was a previous, draw a line here. This was a previous resistance area across here. It got through that and has now found support. So you'd expect to bounce right around here. What is interesting is the equal weight Qs. The picture looks much different. It's still down, but it's much stronger. And the reason for that is the big so-called big seven today. Take Apple, had a crappy day. Not that bad. Microsoft, big down day. NVIDIA, big down day. Tesla, big down. And Google. Oops, G-O-O-G-L-O-G-O. Can't spell. these big mega caps were down big on the day. So money is clearly flowing out of these big behemoth stocks and appears to be moving in down a bit to the mid caps. So which is why the MDY back there again had a decent day. Following through so the Canadian equivalent of the S&P 500 had a very similar day. So yesterday we talked about entering above here or stopping below here. So simply we just more strategy, we just move this down in the SNCC. So the entry would be around 71.90, but the stop has got to be a little bit deeper. And the stop comes down here at 71.38, but strategy is still unchanged. So if a 3-day pullback, it's a very high probability, very quickly it's going to get back to this high. We're now 6 days into it, so the probability of it doing really quickly is a lot less. So you can expect some movement back up here, but it won't be just straight vertical line back up. But still, this is if this could be a really low risk entry for the S&P 500 in your Canadian account. Toronto had a pretty good day today. Don't know why. Don't care. Open right near the low, and then whooshed straight up. So looking at the weekly chart, this has done this a few times. It's operating in this box here. It comes down, goes back up, comes down, tests it up here, and then back down. So when I saw that this morning, I actually entered the double leveraged proxy ETF for the Toronto Exchange. I noticed the opening was right here down the close. It didn't do anything. And finally about here, I opened a position and with my stop just underneath the low of the day. So like a 1% risk. I'm willing to do that, and I'm already up about 1%. So if it keeps on going a little bit, I can just raise my stop to break even, and then I don't really care what happens after that. So that was one add to the position to my portfolio today. Also off the watch list was West Shore Terminals. It triggered. I had a buy stop here at just above yesterday's high and got filled, and it really hasn't done anything, but hasn't done anything bad. So we'll see what happens. My stop is underneath here, so it's a really tight stop. On the US side of things, I had an open position in NOA, and it performed rather poorly today. My entry is up here, so I'm slightly underwater. Stop is still way down here. But this is not performing the way it should. This jump out of this base, couple of day pullback is fine. Even 3 days would be fine, but this one's pretty severe. So rubber's got to meet the road here in the next couple of days in this turnaround, or else it's going to stop out. And then this was on my high on deck list. It wasn't on my focus list, but it triggered. I had an alert set here at 72.29. And coincidentally, right at the same time, Mark Minervini issued a buy alert on this one because it broke this trend line. So even though it wasn't in my planned active list for the day, I took the trade, and it went up a little bit, and then it's had a poor close. So it is what it is. We'll see what happens. My stop is right underneath here, so it's pretty tight. See what happens over the next couple of days. That's pretty much it on my focus list on the Canadian ones. Stantec is, I drew these lines. I wanted to wait a couple more days, so it's doing what I thought it would do. So it's a little early to enter that one. And FTT triggered my alarm, but I didn't take it. I had an alarm set at $40, but I didn't take the trade for whatever reason. I just didn't like the looks of it. And these bars are so wide that I really want this to tighten up a little bit. So I'm going to wait a few more days on this one. And on the US side, on the focus list, not much else happened. Spotify, no interest yet. Needs to tighten up. This one's sort of falling out of bed now, so I'm going to move that one out of my focus down to buy on deck. TMDX, again, this is not what you want to see. It took out yesterday's high, but it also took out yesterday's low, and so it's what's called a wide range bar. It's not what you want to see. I want to see the exact opposite. I want to see really tight action, so that there's it's showing me that there's the buyers and sellers are in balance, and then any imbalance on the buy side is going to really move the stock higher. So we didn't get that here. Same thing with DraftKings. Again, a big wide range day today. It took out yesterday, Friday's high and the low. So this really just needs to tighten up for a few more days. And then FIX is the last one on my focus list. And again, it's still kind of whippy, so this needs to tighten up. And it closed right near the bottom. So that's about it. That's my update. I'll try and if anything interesting happens tomorrow, I'll fill everybody in, but if not, later in the week. Cheers.